So in my last video, I talked about 3 value stocks that I was currently considering, and one of them was of course AT&T, which I am already heavily invested in, but another stock was Abbvie, ticker symbol ABBV. It's a pharmaceutical, kind of a biotech company, and I mentioned that I wasn't invested in them yet because I felt that they just had too many fundamental problems and I wasn't brave enough to buy the stock yet. Well, it just so happens that as I'm posting that video, breaking news comes out that Abbvie was acquiring Allergan, and Wall Street hated the decision because the stock was crashing by like over 10%, and during the day it crashed by even more. And I felt like it was too late to redo the whole video, so I just went ahead and posted it, left it up, and I basically told you guys in the comment section that I would just make another update video on the acquisition, share my thoughts, and let you know if this most recent crash was enough to get me to finally buy the stock. Well, I actually did end up buying the stock, and even though I think that the acquisition doesn't really fix the majority of their problems, I just feel that their dividend is mouth-watering at this point and their valuation is incredibly cheap. So I felt like it was worth it to just give Abbvie a shot at this point. So in today's video, I want to talk about the acquisition, I want to share my thoughts on it, what it means for the future, and I want to talk about the reasons why I decided to purchase the stock. I'm going to try to keep the video kind of short and to the point because there's a lot to cover, but if there's anything that you want to add or you want to share your thoughts, go ahead and leave them down below. But I hope you guys enjoy this video. Let's get started. What's up everyone, my name is Ale and welcome back to my world of stocks. Let's go ahead and get started by pulling up the stock chart. Okay, so you can see here that the stock was actually climbing by a lot up until 2018, where they reached around $125 per share, and then it came crashing all the way down to just around $67 per share at the time of this recording, which is a drop of around 45%. And you can see here that they dropped by over 16% yesterday alone before bouncing back a little bit today on Wednesday by almost 3%. By the way, this video will probably be posted on Thursday, but it's being recorded on Wednesday. Anyways, this now puts them at an amazingly cheap valuation of less than 9 times forward GAAP earnings and less than 8 times forward non-GAAP earnings, both of which are less than a third of where the sector median currently trades. Yet this is easily one of the biggest players in the industry and should therefore command a higher valuation in my opinion, but again, you would have to triple their valuation just to get anywhere near that sector median. Their PE ratio is also at some of the lowest levels it's been in recent history, while their dividend has now skyrocketed to over 6.5% yield. And while they do have a horrible balance sheet that we'll talk about in a second, their payout ratio is still pretty reasonable at about 52%, and they've grown that dividend every single year since they started paying it after being spun off from Abbvie Laboratories, as you can see on this chart here, and their dividend growth rates have easily been in the double digits, while last year's dividend grew massively at over 40%. I'd be surprised if it kept growing anywhere near those levels considering how high the yield has now become, but it still shows a willingness to increase the dividend, especially when you consider that their original parent company in Abbvie Laboratories had been growing their dividend for literally decades up until they spun off Abbvie, so many analysts still consider this a dividend aristocrat, having increased that dividend for over 25 straight years. But enough on that, let's transition now to the acquisition and talk a little bit about both companies' performance, their struggles, and what this means for the future. Okay, so the deal was to acquire Allergan for about $63 billion in a combination of cash and stock, and the deal values Allergan's shares at about $188, which was an increase of about 45% higher than what Allergan was trading for right before the deal got announced. However, if you consider Allergan's debt, the deal is really valued closer to $83 billion, which is really scary when you consider Abbvie's already horrible balance sheet. Here's Allergan's balance sheet from their last quarter, and you can see that while their current assets are pretty close to covering their current liabilities, their long-term debt is basically running unchecked with about $20 billion worth of long-term debt. I know they have nearly $100 billion of total assets, but most of that is goodwill and other intangible assets that I don't really consider when I'm evaluating a balance sheet. Again, this is bad news considering that Abbvie has enough of their own debt to worry about, with around $35 billion of unchecked long-term debt. This is an absolutely terrible balance sheet that just got even worse in my opinion. Still, Abbvie is a company that continues to bring in high growing sales and profits, with sales climbing to over $32 billion last year, while projections from Markets Insider puts their sales, operating cash flow, and free cash flow growing to much higher levels all the way through 2024. So they definitely can pay down that debt over time, incrementally if things go well. But that brings us to the reason why they're making this move in the first place, and that's that their Humira drug is going to lose patent protection. Because of this, it has been argued for a while now that Abbvie needs to make some sort of move or acquisition. See, Humira is the #1 largest selling drug in the world and made up around 57% of their sales in the last quarter. But because it lost its patent protection in Europe, the drug has now seen year-over-year declines for what I believe is the first time in history, dropping by as much as 23% internationally last quarter alone, although it did climb by 7.1% in the US. But that US patent protection is ending in 2023, so it makes sense that Abbvie wants to make a move right now in preparation for the future. Thankfully, they do have several other successful drugs that are growing at very high rates, like their cancer treatment drugs growing by 50% year over year in their last quarter, that are already making up close to a third of Humira's sales, and one of their cancer drugs in particular, that is called Imbruvica, only did about $1 billion in sales last quarter, but Abbvie expects it to reach sales of $7 billion in just a few years. Other analysts think that it can do nearly $10 billion by 2024. For context, Humira did about $20 billion last year, but even in 2024, which is a full year after they lose US patent protection, it's still expected to do around $12.4 billion that year, so Imbruvica alone could probably make up a lot of those declining sales. And even still, they have several other new drugs in the early stages of regulatory approval, including a replacement drug for Humira that is supposed to be more effective at treating rheumatoid arthritis and is estimated to eventually reach sales of over $6 billion a year, while their other key new drug called Skyrizi got approved just a couple of months ago, and Abbvie believes that the two drugs together will generate combined revenue of $10 billion by 2025. Now, as far as what the acquisition gives them, Allergan isn't really a growth company, but they are at least expected to generate over $15 billion in annual revenue through the next few years, with over $5 billion in free cash flow, which is pretty good, although the last couple years were not profitable on a GAAP basis. But by adding Allergan's revenue, Abbvie's dependence on Humira drops from 57% to less than 40% of revenue, and all the meanwhile those other drugs that we talked about earlier continue to decrease it even more in the future. Now, Allergan's best-selling products are Botox and Restasis, which are both higher margin than the rest of their portfolio. Restasis is a dry eye treatment, while Botox is used for aesthetic purposes, and I can attest to the high margins of Restasis because my doctor prescribed it once, and I don't remember how much it would have costed, but I remember when the pharmacy told me the price, I almost had a heart attack and I refused to purchase it. So it's definitely high margin. But either way, both are starting to see a rise in competition, namely from Teva Pharmaceuticals and Revance Therapeutics, with Revance in particular filing for FDA approval later this year, which could set it up for serious competition to Botox by the end of next year. Still, I was listening to Abbvie's conference call, and their CEO noted that they researched Allergan's portfolio very extensively and feel that their current and future products will only help Abbvie's growth moving forward, also noting that this diversifies them a bit more, notably in aesthetics, women's health, and eye care, while also strengthening some of their other areas like gastrointestinal, also noting that several brands have a lot of growth potential that haven't really been factored in, like Vraylar, for example, that is expected to reach blockbuster status in the next 5 to 6 years. Meanwhile, they're increasing scale, combining research and development, and creating over $2 billion of cost synergies by the third year, while generating enormous cash flows that were almost $20 billion in operating cash flows last year alone. And they plan to use this cash to pay down debt, with plans to lower their debt by $15 to $20 billion by 2021, while further deleveraging through 2023. They want to continue funding innovations and strengthen their pipeline, with their new growth platform doing revenue of more than $30 billion in 2020, which does not include Humira, by the way, and it should continue growing by high single digits through the next decade. And finally, they will also use the cash to continue growing their dividend. All the meanwhile, they expect a 10% increase to their EPS within the first year, with a peak increase of over 20%. Okay, it's time to go to my conclusion and share my final thoughts on everything. So when looking at the acquisition in particular, I feel that Wall Street wanted to see something more exciting. And when looking at Allergan, their two biggest products, highest margin and highest sales, are Botox and Restasis, both of which have their issues very similar to Humira in the sense that they are going to face growing competition. So I think when Wall Street looks at this, they see two companies with fundamental problems, both of which have really bad balance sheets, and they don't really feel like two wrongs will make a right. It's two companies with very similar issues, just kind of merging to kind of help offset some of their problems, but the problems are very similar. On the other hand, I think Abbvie looks at this as, okay, we know that Humira is going to struggle in the future. We have some growth products that can help offset that, but it may not be enough. And so let's pick up a well-established company already that has some high-selling products already with Botox and Restasis, and that also has some smaller kind of growth drivers for the future. May not be that big, but again, ours are not that big either. So let's kind of combine everything. Let's bring in their R&D, let's scale up together, let's create some cost synergies, and let's increase our cash flow to continue to pay out our dividends sustainably and grow it sustainably in the future. And let's use all of that to kind of pay down our debt as well. So from that standpoint, it does kind of make sense, but it's still a really bad balance sheet. And so I feel that if things go wrong, they can escalate very quickly when you have such a poor balance sheet. So I think there's still some risk there, and then the risk of competition in the future. There's just a lot of uncertainties with this company, but given the fact that the stock has crashed by so much, I feel like you do have a little bit of risk protection from that standpoint. Because when you really think about it, what's going to happen going forward? Well, shareholders still need to approve the deal. So if the deal doesn't go through, then of course Wall Street completely overreacted and you just bought the stock at like a 16% discount. If the deal does go through and everything goes according to plan, how Abbvie sees it, then again, Wall Street overreacted and you bought the stock at a 16% discount. Another thing that can happen though is that things go poorly. But even if things go poorly, the stock has already crashed by another 16%, and the stock was down a lot even before that. So a lot of this negativity is kind of already priced into the stock, or it's at least being priced in as we speak. So in the future, I feel like, as long as things are just kind of okay, this may end up being a decent stock for the future, and one that will at least be growing a dividend. Not to mention that dividend is already very high. And when I was listening to the conference call for the whole kind of acquisition, the CEO was asked about that dividend by an analyst, and he pretty much alluded to the fact that that was one of the reasons why they made this acquisition, was because of the dividend. They're very passionate about growing that dividend, and they want to keep that growth history going. So it is very important to them, which is what I was like. I was listening to that whole kind of conference call, just listening for the dividend. Like, I want to hear them talk about the dividend, because I don't want to buy this stock if that dividend is going to disappear. Of course, you can't trust, what they say. We've heard other companies didn't, like Kraft Heinz and even GE, didn't they say that they didn't want to cut their dividend at all, and then GE like completely wiped their dividend. So you never know what's going to happen. But I think there is some evidence to suggest that their cash flows will be very high, and that should hopefully sustain that dividend and also help pay down some of their debt. Anyways, I'm getting a little bit off topic, but just to kind of summarize everything, I did buy the stock. It's a very tiny position in my portfolio for a couple reasons. Number one, I'm not an expert in the kind of pharmaceutical sector, so I don't want to be heavy on it. And number two is because I think there's still some very deep fundamental problems with this company. So I ended up purchasing 1% equivalent to 1% of my portfolio. That's what I ended up picking up. And I know that doesn't sound like much at all, but you know, I have been investing in stocks for a very long time. So in relation to the rest of my stocks, 1% is still a decent amount for me. But here's kind of my strategy. The way I'm looking at it is, if the stock falls another 5% from my position, then I will double down. I'll add a little bit more because I have to kind of make up for that 5% drop. But I'll kind of double down and I'll try to make it 2% of my portfolio if it drops 5%. And then if it drops another 5%, I will add again and try to bring it up to 3% of my portfolio. But that's if it drops by 5% and then another 5%. On the other hand, if it just climbs up from here, from my cost basis, I don't think I'm going to be adding to it. I'll just let it naturally become a bigger position. However, with my dividends, I will add to it. If I'm feeling good about the company, I will add to it from the dividends that they pay me. So that's kind of my strategy. In terms of the cost basis, so you guys know that I don't like to give out specifics because it's personal information, and we already went over this in other videos. But because of all the stuff that's going on right now, because everything is so sudden, I'll compromise with you guys. I'll show you guys a screenshot of my cost basis. Right now, I believe, let me just check here. It is $68.30 is my average cost basis on this stock right now. And I'm currently down about 1%. So that's where I'm at. If it drops another 5%, another 5% on top of that, so 10%, I will keep adding to it. But if it's dropping more than 10%, I probably won't keep adding to it, because at that point it's got to be like a falling knife, and who knows where it's headed. And obviously this all depends on any kind of news that comes out and any kind of updates. But anyway, I think I will be making more videos for you guys on Abbvie in the future, because now it is literally a stock that I own. I'm actually kind of excited about it. I'm hoping that dividend brings in some recurring revenue for me in the future, and I'm kind of excited about that. So anyway, I hope that you guys enjoyed the video. Let me know how you guys feel about this company. Is it still too risky for you? That balance sheet is horrendous, so I don't blame you if you do not want to touch the stock. But I think a lot of you do actually like this company, and you would be interested in buying the stock, especially for that dividend. It's like 6.5%. That is a really nice dividend. But anyway, share your thoughts down below. And thank you guys so much for watching. I really appreciate it. Hit the like button if you enjoyed the video. I'll catch you guys in the next one. Take care. Bye-bye.